things in the news recently is the London silver fix that's closing. It seems to be along those lines that there's some speculation the gold fix might also follow suit. Is this a likely outcome? Is it a possibility?
Yeah, it's definitely a possibility. How likely? I don't know if I could put kind of a probability number on it. Yeah, maybe 50%. They're going to have to work out some other way of coming up with a reference price that cannot be quickly tampered with. What we saw with this case against the Barclay gold trader was an attempt to manipulate the gold fix at the last minute in order to profit from some business that this particular trader was involved with. That, I don't think that's happened much, and to the degree that it's happened, I think it's marginal, but the reality is if the regulators get involved, these things are going to have to stop. They should stop. And so we're going to have to figure out some other way to come up with a reference price. But we want reference prices.
Yeah.
Reference prices are very, very important in international commerce. I don't know that many people know, but Bank of Canada has a reference price for the Canadian dollar every day at noon, right? So that customs clearance numbers can be calculated and taxes can be levied and so forth.
Okay.
And an awful lot of transactions in the gold market and the silver market are based on what that reference price at 3 p.m. London time is.
Okay, so it's definitely important for just globally.
That's right.
Okay. But keeping in line with that, if the gold fix does come apart, what role is China likely to take with their Shanghai Gold Exchange?
Well, the role that China seems already to have embarked upon is to boost the importance of the Shanghai Gold Exchange in terms of world gold developments. China's base interest is to set up a market where gold can be traded in yuan renminbi. Okay? In fact, China would like a lot of things to be invoiced in yuan renminbi. So it wants to internationalize the yuan renminbi. And it's possible that China could come up with some way of determining an appropriate reference price for gold if and when the gold fix itself disappears.
Okay.
It presents them with an opportunity of sorts. And I would expect that the Chinese will look at this closer to see if there's some opportunity here that they can capitalize on.
Okay. It seems that that's something they definitely want to do, though.
Yeah, I would think so, yeah.
Yeah. Another thing I keep hearing is that the U.S. economy is doing better. Now, I don't want to say I'm a skeptic, but I've been wondering if this is a fair assessment or if there's something we're just missing or we're possibly not looking at correctly.
No, I think it's a fair assessment, but better is not best. It's better is relative to where it was before. And in that sense, the U.S. economy is doing better. Unemployment rates are now around 6.3, 6.4%. They were up over 8, so that's certainly better. Inflation rates were somewhat lower than they are currently. So we happen to think that inflation rates are just in a little bit of a blip here, but nevertheless, those are two indicators that the Federal Reserve looks at carefully, and those indicators are better from their point of view. We saw the U.S. economy contract in the first quarter by a 1% annualized rate, and that certainly would suggest it isn't doing better. But I think we'll have to see the second quarter and average the two out before we can say anything definite about the first quarter. First quarter was very affected by bad weather and inventory destocking and so forth. So from time to time you get a bad number. Housing market is better. House prices are higher than they used to be. We've got a few more housing starts than we had before. So for me, yes, better is the right description. Is it where the Federal Reserve and the administration would like it to be? No, definitely not. They'd like to see something like 3.5% or 4% growth. But I don't think we're going to see that anytime soon. And it isn't just because of the Great Recession. But there's other bigger factors at play. We've got less people entering the workforce, productivity is down, and so forth. So all of that also adds into a slower growth profile than what we were used to.
Okay.
But we're better than where we were, let's say, 3 or 4 years ago.
Okay, so it's getting there, showing some signs of life.
Yeah, it's showing signs of life, correct.
Perfect. And then my last question is a little bit of a gold price speculation.
Yeah.
We are at the back half of the year, or starting the back half of the year. What do you think we're going to see in terms of gold prices? What should investors be looking out for?
Okay, well, the first thing that investors should know is that right now we're probably at the epicenter of seasonal weakness.
Okay.
So this period from April through August is a seasonally weak period for gold.
Yeah.
And as I said at my talk, that opens up the possibility of somebody who definitely wants to sell gold in size. If that were to happen, that would have a market impact. Mm-hmm. Okay? There's just not as many buyers right now as there would be at other times of the year. Now that will change after August. So that's the first thing I would say, that we're going to go into a better seasonal period in the second half of this year. And my own bias is to look for gold to do somewhat better. In fact, I'm thinking that in the second half of this year, and this has nothing to do with geopolitics or so, because that's a wild card, but we could see gold prices back close to 1,300 and maybe a little over 1,300. As we're talking, it's very possible that we will see somewhat lower prices between now and the end of August.
Okay.
But bigger factors, well, we're going to watch the U.S. economy, we're going to watch the Fed, we're going to watch what China does. Hopefully one of these months we're going to hear that China has bought gold. Maybe India will relax its gold import controls. Mm-hmm. Some people will be looking at inflation and saying, hey, those numbers are up a little bit. Maybe I should start to think about gold again, that sort of thing.
Okay.
So there's some bullish factors out there that could be helpful.
But if something bad is going to happen, it will happen in the seasonal period of weakness.
I would think that's the most likely. Yeah.
Okay.
Yeah, and there will be headwinds for gold, regardless of the seasonal period. Yeah, the U.S. dollar does not look like it's going to go down this year. I would like to see it go down, but it doesn't look like that's going to happen. And people are worried about the Fed doing something on the interest rate front. Now we think the Fed's going to stay away from doing anything until after the first half of next year. But speculation can go opposite that and move the markets down a little bit.
Definitely. Well, thank you very much for that.
You're welcome.
That was Martin Murenbeeld, Chief Economist of Dundee Capital Markets. I'm Vivian Diniz with Investing News Network. Thank you for watching.